Welcome to the Snapshot edition of the Daily Video Update. This is being prepared Thursday, April 7th, where we'll look at the action in the market briefly for today and then see how things look for Friday, April 8th. And it was an up day, but a lot of things didn't really change on our daily charts. We're still looking more negative. We need a lot more than a 0.43% gain. That's if you want to take things a little more negative, because we're just seeing a real breakdown to continue for the most part with a lot of our technical indicators. Now, looking on the positive side, we hit some support during the day and we're able to bounce up off of that. And that pretty much carried us through the day. We saw a little bit of selling going into the close, but for the most part, that can be seen as positive. But the big question is, can it continue from here? If you think back into the middle of March, we hit support and then really started to bounce up off of that and then led to a pretty sizable advance. Is that going to happen this time? It's one of our possible scenarios that we can think about, but we need to see more follow through, and we're going to need to see the kind of follow through that changes a lot of our indicators back over to positive. So what happened on Thursday? We did have a gap lower right at the open. We sold down to S1, and then we actually went all the way down to S2, and that's where we found some support. We were able to rebound off of those prices. We kind of stalled a little bit at the unchanged level, which in this case was acting as resistance. We were able to get above that, and we climbed to above R1. We closed off of the high because of some late day selling, but we were up 0.43%. And this can be seen as kind of positive too. We're back at average volume, at least for Thursday, because we've been seeing volume really trailing off. Our technicals continue to be more negative than positive right now. Everybody is still battling with inflation, interest rates, the same geopolitical concerns that are happening. We're still battling with the yield curve inversions that we're seeing. One of them, the 2 to the 10, that actually switched back positive. And that could be somewhat positive for the markets. Yes, that might mean that anywhere from 6 months to 2 years from now, there might be a recession. But typically what we've seen after a curve goes inverted and then switch back and is more positive, we generally see a pretty good advance from that. However, we're seeing differences in our yield curves. Some of the yield curves are still inverted. Some of them are actually advancing. And then there's one right now that was inverted that has switched back to being more regular. And then, of course, all the oil supply issues dealing with the oil reserves. Is that going to really lower gas prices? What's that going to do to our reserve situation? That debate is still going back and forth. So what are some comments that we can make? The technicals are still weakening on our daily chart. Just a little bit of an advance that we saw is not enough to really turn things around, but that's how the big run up started back in the middle of March. And that's why a lot of people didn't believe it, because their daily charts were still looking pretty negative. That's why I like to follow the intraday charts to really get a more of a grasp on what's actually happening. What was causing things to go down is the same thing that was happening on Tuesday and Wednesday. We saw rising interest rates and they're going up pretty furious, and the futures were down, and then ended up taking stocks down, at least at the open, until we hit that support level. And then we're able to bounce up off of that. The S&P is now back above its 200-day simple moving average. And that shows a lot of the indecisiveness that we see right now. We're seeing that as far as sentiment. People don't know whether to be freaked out or to be optimistic about things. And one day we're above the 200-day moving average, then we drop below. Then we're above, then we're below. And that's kind of the real line in the sand between positive and negative. And so as we keep bouncing around that moving average, nothing is really going to get decided. That midday rebound was positive, but we need to see it have follow through if things are going to turn more positive. And even when we have a down day or an update, sentiment is not necessarily, it's not dropping, but it's not really rising either. The economic report that came out on Thursday was that consumer credit is growing. And if you think about it, people are having to pay more, but they're not necessarily getting a raise where they work. So they're having to use more debt or expand their debt just to make ends meet these days. The market is still fairly valued according to the current market valuation model. And this is one change. Our trend has now gone below 20 with the ADX, and we are now in a trendless environment. Even though we had the up day because of the strong down move that we saw early in the day, and can we see any follow through to the rebound, I still have the bias as mixed. And then our momentum is still overall negative. So, and I just wanted to bring this up. I show this in the full-blown daily video, but we're just, excuse me, dancing right around the midpoint right now. Kind of like the 200-day moving average. If we're above that, then get a little more positive. We'll go below that and get a little more negative. So then here's the daily chart where we came right down. We're above the pivot, but you notice in this resistance area, that was the high that we set before we saw a little bit of selling going into the close. Can we continue to break up out of that? And then there's still overhead resistance above where we're at. If we go lower from here, can we stay above the pivot, or are we going to fall down below that and go back down into prices that we saw not too long ago? Looking at volume, the moving average for volume and the amount for volume were just about the same on Thursday. Here's the ADX. We're crossing below 20, and these two lines are pretty close to each other, and it shows that the trend is continuing to weaken. So as long as we stay in here, we can look at more of a sideways, choppy environment until something happens, either positive or negative, to break us out of this trendless environment. And you can see just in the last year how we can spend long periods of time really in more of a trendless environment. Then here's our moving average spaghetti tree, which just shows we were able to get back above the 200, but we still have the 100 above us, which could act as resistance. And in choppy environments, the 100 moving averages, they come more into play. Then with our rainbow, we're still kind of about in the middle of the rainbow, trying to decide if we're going to go up or we're going to break down from here. Then we're just slightly above the 200-day moving average. It is at 44.91, and we closed at 4,500. So we're 9 points above the 200-day moving average right now. But hey, we get a 9-point decline on Friday, and we're back below it again. So what's our outlook for Friday? The technicals. Some have already switched over negative, with others showing weakness. They're getting ready to roll over and cross negative unless we see some real positive price action. We're still in that intermediate term range. The battle between growth and value is just a daily back and forth battle. We're still talking about these different yield curve inversions and what the concerns for that might mean. We're still battling with the oil issues, with the reserves, and then they still have the lockdowns going on in China. So what's that going to do to the supply chain issues that we face in the US, and what's that going to do to us economically? And then the economic report that came out, or that will come out, is wholesale inventories. Not a real big market mover, but still part of the overall picture. We still have the whole Russia-Ukraine situation going on. Other than watching what's going on as far as policy and how it can affect the stock market, I haven't really seen anything real decisive with all of that. And then, of course, the things going on in China that could bleed over into the supply chain issues that we've already been battling. The yield curves, some are inverted, some are not inverted. And then the whole situation with what are we going to do about gas prices if you're trying to fill your car up or heat your home. So here's some of the scenarios. What could happen for things to go down from here? Well, as we've seen throughout a lot of this week, rising interest rates, as they're going up, stocks tend to go down. And then people are kind of freaking about the yield curve concerns, even though what may happen could be far into the future. They're still freaking out about it right now, but by the time it happens, this will be out of the news cycle and we will have likely forgotten about it. The internals in the market and some of the broader indexes are also showing weakness in addition to the S&P. So all of that taken together points kind of a negative picture. And that seems like a very viable scenario right now. Okay, what's going to help us to go up from here? What's the scenario that we can look at? Well, we saw that short-term intraday bounce at about 44.50, which was at S1 on the daily chart. I'm sorry, on the intraday chart. Can we see some follow through? Because our oscillators, some of them are still positive, but we have a lot of them that have turned negative or are showing weakness. We still have some moving averages below us that are acting like support, but we also have other ones that could act as resistance. And then the fast drop that we saw on Tuesday and Wednesday, a lot of times that may give a bounce. Well, that's what happened. We did see the midday bounce that looked pretty good, but can it continue? Now, the scenario that a week ago seemed unlikely is now seeming to be more likely right now, is that the ADX has dropped below 20 and it continues to decline, which would suggest we are in a sideways type of environment where we might see price movement slow down and become much more choppy than it's already been. And then in that case, maybe some of your market neutral strategies or iron condors, maybe some covered call writing if you don't want to get the stock called away from you, debit spreads, things like that, that really focus on a sideways type of market. If we continue in that environment, might be what some of you are willing to explore. So what's our conclusion? The S&P is weakening right now and looks like it's turning negative. It's a little bit positive because we're above the 200-day moving average. But if we drop below that, we're now looking at a more negative scenario. In the short term, we're showing mixed to a weakening environment. And that's probably more of a leaning towards the weakening in the short term. Intermediate term is still somewhat positive, but showing weakness. Some of our oscillators are still positive, but others have already switched to being negative or showing weakness. And then the moving averages, if they're below where we're at right now, they could provide support. If we start to go higher, they might provide some resistance. And at least as of after Thursday, our long term has switched back to positive because we're above the 200-day simple moving average. So here, just a list of the different videos. What I'm recording right now is the daily snapshot video. Please watch the full length video if you want to get a more in-depth look at my analysis. Over the weekend, I will prepare the weekly video, and I'm probably not going to be able to prepare any of the monthly videos over the weekend. I just have too much going on. So thank you. Have a wonderful Friday, and I'll prepare the next snapshot video after Friday's session.